Hello and welcome to Trader Chat number 30. Today is the 27th of June 2012, and as always we need to do the right thing by running through our disclaimers. Our first disclaimer reminds us that all trading involves risk. Please be aware of and accept this risk before trading, and never trade with money that you cannot afford to lose. You should also be aware that past performance of any trading methodology is no guarantee of future results, and no representation is being made in this webinar that any account will achieve similar to those discussed. Finally, all results should be considered to be hypothetical unless otherwise specified. And hypothetical performance results have many inherent limitations, and unlike an actual performance record, do not represent actual trading. Those are our legally obliged disclaimers. A few pointers about using NetViewer for those of you who are new to Trader Chat. The first thing you should be aware of is that the best way to ask questions is to type a message into the chat window. If you cannot hear me, slide your speaker slider up to the right hand edge of that speaker slider thingamajig. And if you'd like to speak to me, right click, enter a chat message into the chat window, so that I know that the right click is not accidental. Speaking of which, be aware that mouse clicks in the NetViewer window pop up brightly colored arrows or speech bubbles with your name attached to them. Just a reminder of our new schedule, which caught us by surprise as well today. We are now doing Trader Chats every Wednesday, but we are doing Trader Chats at alternating times. We have combined our signals chats with our Trader Chats, and instead of doing them on separate days, we are now doing them always on a Wednesday, but at a different time, so that we can target different time zones and thereby keep people around the world happy with information about Hurst and Sentient Trader and the cycles in the markets. So without further ado, let's start speaking about the markets, and let's switch to a picture of Sentient Trader. Let me just check that is going out. Yes, there we go. As always, I will be delighted to answer any questions that you have, obviously in relation to Sentient Trader or Hurst cyclic theory, or what's happening in the markets at the moment, or anything else that you would care to ask me, and I'll do my best to answer those questions. Because usually at this time, although it has previously been on a Thursday, but usually at this time, midday in Italy, we would have what we called Oz Trader Chat, which was a Trader Chat specifically aimed towards the Australian time zone, because it's evening, of course, in Australia right now, and so I thought that I would just follow up on the analysis that we've been tracking in the Australian markets, because there are, as always, some very interesting comparisons to be drawn between what's happening in the Australian markets and what's happening in the American markets. And usually, of course, we speak about the American market. So I thought that today I would kick things off by taking a look at what's happening in the Australian market. I know that many of you aren't in Australia. I do see some Australians there. It's good to see some Australian Sentient Trader users with us. So I'm going to kick things off by taking a look at the Australian market and speaking a little bit about what's happening in the Australian market, drawing some parallels with what is happening in the American market. And we have had some very interesting emails from some Sentient Trader users asking about some of the things that I wrote in ST Outlook this past Saturday about the long-term picture in terms of what is happening in the really long-term picture and where that 54-month cycle should be positioned. So I thought that I would touch on that and just chat a little bit about how, as a trader, you need to approach a situation where you don't really know what's happening to the 4.5-year cycle, and how you should work with that. I see several greetings from people. Hello to everybody, and so let's get going. Here is the analysis that we have been tracking in the Australian stock market. Am I correct? Is this the Australian stock market? Let me just make sure. Yes, this is the ASX, the Australian stock market. This is the analysis that we've been tracking in the Australian stock market, and so let's go through a few of those highlights. Okay. The first thing, of course, is that, in fact, if I zoom back a little bit, and I'm not going to repeat too much because our recordings from previous Australia chats are available for everybody to watch. So you will know that, of course, one of the big questions in the Australian market at the moment is, was the 18-month trough in the second week of August or in the first week of October? And I notice I thought there's a question, some people saying hello. So one of the big questions, of course, that I've spent great length arguing about previously is whether that trough should have occurred in August or October, the 18-month cycle trough. And of course, I've spent time speaking about fundamental interaction, which potentially happened on the 9th of August. And so my preferred analysis is that, in fact, the 18-month cycle trough occurred in the first week of October 2011. And the reason for that is because 18-month cycle troughs are generally really big events. They obviously happen once every 18 months, and they tend to be events that are coordinated around the world. However, 40-week troughs, which are, of course, 1 degree of magnitude less than 18-month troughs, tend not to be quite so closely coordinated. How is that possible? It's possible because, of course, of the principle of variation. The principle of variation tells us that cycle wavelengths are constantly varying. And so what I believe is happening around the world at the moment is that some markets have formed the 40-week cycle trough in their price movement. In fact, I continue to favor only slightly favor the fact that the 40-week cycle trough has formed in most of the US markets. I think it is more likely, however, that the 40-week cycle has not formed in the Australian market. But before we look at the details, I'd just like to mention something. When you're looking at possible analyses in Sentient Trader, or when you're considering possible analyses using Hurst cyclic principles, various question marks will be raised as you're taking a look at the analysis. And so, of course, I can draw some question marks here. And the first question, when you look at the Australian market, is there's a question mark in terms of, was the 18-month cycle trough in August or was it in October? Now, you can argue this fact until you're blue in the face, as I have previously. I didn't go blue in the face, but I did argue it at great length. And I see that Alain says, could we assume that the longer the cycles, the greater the commonality factor? Yes, absolutely, Alain. You've touched on another whole topic of discussion, the topic of commonality in the markets. But personally, I believe that the longer the cycles, the greater the commonality that happens between those cycles. That's something I believe. It's a bit of a personal interpretation. To my knowledge, Hurst never actually specifically said so, but it's something that I have found. I first noticed it because I started my trading career as a South African living in South Africa, and I was trading the American markets and the South African markets. And I noticed, before I even discovered Hurst cyclic principles, I noticed that some troughs happen to be very synchronized, and peaks, of course, happen to be very synchronized between the South African and American markets, and some didn't. Some seemed to occur some distance apart, a few weeks apart, a few days apart, and it was only after I discovered Hurst cyclic principles that I put two and two together. And I realized that what seemed to be happening was that the longer cycles seemed to be occurring with more commonality, and particularly when you find major troughs or really obvious troughs occurring in a market on the same day as happened on the 4th of October last year, that I think is a very important sign that you have experienced a trough of a great degree of magnitude. Yes, and as you say, examples are market lows of 2003 and 2009, which occurred all over the world, and occurred very much to within a day of each other, all over the world. It didn't matter what country you were in or what market you were looking at. But to get back to the point that I was making with these two question marks, you can argue, was the 18-month cycle trough in August or was it in October? And this, I will be sort of coming back to this a little later in today's Trader Chat, in answer to a question that we were asked about the positioning of the 54-month cycle trough. And although I believe, obviously, as a trader, you should choose one path, and you should say, I think that, in fact, the trough was in October, which personally I do. You might believe differently. But what I also think is important is to keep an eye on the other analysis. Okay, in Sentient Trader you can create up to 6 charts in a single workspace, and so when I am analyzing end of day data, I instead of creating separate charts for different instruments in a single workspace, I focus a single workspace on one instrument. And so this particular workspace is dedicated to the Australian stock market, and I have created a separate chart for all the different possible analyses. So you can see, if you have a look at my charts here, I've only got 4. I have a preferred, an alternate, an unlikely, and a possible chart. Okay, and I name my charts over how likely I think a particular analysis is to have happened. So I still continue to keep an eye on the possibility that the 18-month cycle trough did occur in August. So I think that's quite important that one should do that. So although you should resolve the argument one way or another, you should nevertheless keep an eye on the alternate. And when it comes to making trading decisions, you need to ask yourself, well, if the alternate turns out, in fact, to be the correct analysis, then does that warn me not to enter this trade at all? Very often you will find that your alternates differ very, very subtly in terms of the trading advice, if you like, or the sensible trading approach that you would take on the basis of